Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 1st, 2024, and we're diving into Chevron's third quarter earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Chevron's latest earnings report provides a comprehensive look at their financial performance and strategic initiatives, and I'm excited to break it down with you.
Revenue and profitability overview. Let's start with the top line. Chevron reported earnings of $4.5 billion for the third quarter of 2024, which is a decrease from $6.5 billion in the same quarter last year. John, what are the key factors behind this decline?
While earnings have decreased, it's important to note that Chevron's cash flow from operations remained robust at $9.7 billion, matching last year's performance. The decline in earnings is primarily due to lower margins on refined product sales and the absence of favorable tax items from the previous year. However, Chevron returned a record $7.7 billion to shareholders, highlighting their commitment to shareholder value.
Operational efficiencies and future outlook. Chevron has been active in optimizing its operations. Can you tell us more about their recent projects and future outlook?
Absolutely. Chevron has started key projects in the U.S. Gulf of Mexico, which are expected to significantly boost production. They've also announced a $6.5 billion sale of Canadian assets as part of their portfolio optimization strategy. Production increased by 7% year over year, driven by record output in the Permian Basin. Looking ahead, Chevron is targeting $2 to $3 billion in structural cost reductions by 2026, which should enhance their long-term value proposition.
Segment performance and strategic initiatives. Let's delve into Chevron's segment performance. How did their upstream and downstream operations fare this quarter?
The upstream segment reported earnings of $4.6 billion, supported by increased production, particularly in the Permian Basin. However, downstream earnings were lower at $595 million due to reduced margins. On the strategic front, Chevron's merger with Hess Corporation has cleared antitrust review, paving the way for further growth. Additionally, they've declared a quarterly dividend of $1.63 per share, reinforcing their strong shareholder return policy.
Risks and challenges. Every company faces challenges. What are some of the risks Chevron is currently dealing with?
Chevron's earnings decline is partly due to lower margins and foreign currency impacts, which reduced earnings by $44 million. Their debt ratio has increased to 14.2%, reflecting higher leverage. Additionally, competitive pressures in the energy sector remain high, which could impact future profitability. Chevron will need to navigate these challenges carefully to maintain its market position.
Key takeaways. In summary, Chevron's third quarter performance reflects both strengths and challenges. While earnings have declined, their operational cash flow and shareholder returns remain strong. John, any final thoughts on Chevron's investment prospects?
Certainly. Chevron's strategic initiatives, such as the U.S. Gulf projects and cost reduction plans, position them well for future growth. However, investors should keep an eye on market conditions and competitive pressures. Overall, Chevron remains a solid player in the energy sector, with a focus on long-term value creation.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Chevron's performance in the comments below.